Oil is gaining value again. After Thursday's technical pullback, oil quotes recovered on Friday, heading towards $89 per barrel. The reason for such growth remains concerns about potential oil shortages. Notably, the market is stubbornly ignoring downbeat statistics on coronavirus cases. The impact of the epidemiological situation can only temporarily cool the hype in the market, while fears of insufficient supply are steadily driving oil prices to new highs. The fact that some countries are unable to meet their obligations to increase oil production, as well as geopolitical tensions in the Middle East and Kazakhstan, are the main factors pulling oil prices up today. As oil continues its rally, experts' hopes for a return of prices to low values are fading. Analysts, investment banks, as well as oil traders are revising upwards their oil projections. No one doubts that the asset will be able to reach the level of $100 per barrel. From a technical point of view, a pullback in Brent crude oil futures was completely offset by a subsequent upward movement. The quote advanced to the level of $89 per barrel again, indicating high speculative interest in the market. The benchmark will most likely extend gains and head for the $100 mark if the price consolidates above $90 per barrel on the daily chart. Otherwise, a natural rebound is possible, as was the case on January 19 and 20. In the foreign exchange market, the ruble is becoming less and less attractive. On Friday, the dollar-ruble pair jumped to 77.5 rubles per dollar, reaching the highest level since the spring of the last year. Then the pair bounced back from that mark. Nevertheless, the outlook for the Russian currency remains gloomy. The ruble keeps trading under pressure from geopolitical tensions, and security talks between the US and Russia also remain in the focus of investors. The market is awaiting a point-by-point written response from the United States to the security treaties proposed by Russia. Amid growing excitement around this issue, the MOEX index fell last week, while volatility and trading volume increased. Investors continue to leave high-risk assets. Even record oil prices cannot support the Russian currency. Thus, under such conditions, it can be assumed that the ruble will hardly be able to strengthen in the near future. On Friday, the dollar versus ruble pair managed to break above its sideways range, limited by the levels of 75.60 and 77 rubles per dollar. As a result, the quote jumped to the 77.5 mark, slowed down and then pulled back to the upper boundary of the previously formed channel. If the price consolidates above the level of 77 rubles per dollar, the pair will most likely continue its bullish run. Speaking of gold, the asset continues to gain value. After sliding to the pivot point of $1,830 per troy ounce, the precious metal edged up again. However, this movement can hardly be called rapid. The quote is growing quite moderately amid investors' expectations of the Fed's decision to further tighten monetary policy. The Fed is expected to raise its key interest rate this week. Against this background, the US stock market sank and investors shifted their focus to more stable assets such as gold. However, investors have been questioning its safe haven credentials lately, so the role the metal really plays today will become clear following the outcome of the Fed meeting. In the meantime, market sentiment on the asset is mainly bullish. Thus, gold futures moved up from the support level of $1,830 per troy ounce again, which indicates a possible continued upward trend. This forecast will be confirmed only if the price consolidates above $1,850 per ounce. In this case, the asset will have every chance of heading towards the level of $1,877 per ounce, the local high posted on November 16. Well, here's the forecast for the beginning of the trading week. Market participants are waiting for the Fed meeting and a breakthrough in the US-Russia security talks. Watch our video reviews to keep with the latest news. Have a profitable trading day. Bye.